Welcome to our segment on the foreign tax credit. The foreign tax credit is basically a mechanism in the U.S. tax code that gives you credit for foreign income taxes paid. And it's very important to remember that these are foreign income taxes. VAT and things of that nature do not qualify for the foreign tax credit. In order for you to be able to claim a foreign tax credit against your U.S. tax, you have to have either paid the taxes or accrued the taxes during the tax year. You cannot take the foreign tax credit for any amounts that were excluded under the foreign earned income or foreign housing exclusion amount. Also, the credit can be carried back 1 year and forward 10 years. So if you're paying more foreign income taxes than are creditable in the U.S., those unused credits may do you some good in the future, maybe even 1 year back. There's some special rules when calculating your foreign tax credit. For example, any work that you performed in the United States and were compensated for is not going to qualify for the foreign tax credit because the U.S. is going to view that as U.S. earned income, not foreign earned income, and it's going to be taxable in the United States. Then there's also the foreign tax credit limit, which basically is a complex calculation to determine what the maximum amount of a foreign tax credit is. It's beyond the scope of this, just know it exists. One other important note is that the foreign tax credit does not apply to self-employment tax. Basically, if you're a self-employed individual, the United States charges a self-employment tax so that you're contributing to Social Security and Medicare. It's an additional tax of 15.3% on top of the income tax. So even if you have a foreign tax credit that wipes out your income tax on your self-employment income, you may still have to pay self-employment tax in the U.S. unless that self-employment income was earned in a country that has what's known as a totalization agreement with the United States. If a totalization agreement exists between your country of residence and the United States, you can obtain what's known as a certificate of coverage from the Foreign Social Security Administration. If you obtain the certificate of coverage, you have to attach that to your tax return, and you would then be exempted from the self-employment tax in the United States. But absent that certificate of coverage, you're still going to have to pay U.S. self-employment tax on your foreign self-employment income. Thank you for joining us on this segment of the foreign tax credit. We hope you found it informative.